In this video, I'm going to show you the most profitable and effective Fibonacci retracement strategy that I've seen or come across before. I want to teach you in this video how to do it. But number one step is obviously to subscribe to this YouTube channel, and let's get straight into it. So step number one is to subscribe, and step number two is to create an account at an exchange. We're going to be using Bybit for this tutorial today. Make sure to sign up to Bybit, link down below. You can claim up to $30,000 in bonus from Bybit, so sign up. But you also have other exchanges down below in the description. I would say Bybit is for sure the recommended one for this strategy. If Bybit is not available in your country, you can use Bitflix, link down below as well. Now, let's get straight into it. So before we start derivatives trading, you need to deposit some money to the exchange. So for this, you click Assets in the top right corner here on Bybit and click Deposit. After this, choose the coin that you would like to deposit here and the chain type depending on the coin that you choose. Confirm the details, scan the QR code, or copy the deposit address to transfer your funds. If you want to make a deposit with fiat, click on Buy Crypto at the top of your menu bar and then click on Fiat Deposit. Choose your fiat currency and enter the deposit amount. Select your payment method and click on Continue. After you have deposited your funds, it is time to open your positions. Click on Derivatives at the top of your menu bar, click on USDT Perpetual, and then this will take you to the corresponding trading interface. Select the asset you want to trade right here. Now choose your limit or market or conditional order. You enter your trade details right here, and then finally choose your leverage. And then you confirm your order details, buy, long, or sell short. Once your order is filled, you will see the position down here in the Positions tab. Now, well, let's get straight into the strategy. Step one is just to understand how to make a trade, but step two is to actually do the strategy. So first, we need a trading view. If you don't have it, link down below. You can use my link there. You will get a discount. Make sure to get the Pro version. And then select the trading pair you want to trade here. And in this case, for example, we're choosing Bitcoin against USDT. Next, click here and choose the 1-day time frame for the best results. Click here, then click on Fib retracement and draw it anywhere on the chart. Next, click here on settings and you can see these Fibonacci retracement levels, which are 0.382, 0.5, and 0.618. 0.618 obviously being the most famous one. These are the levels you're using to see where you get the pullbacks. You can also use these levels for your stop loss. Now, considering the price of Bitcoin recently, you can draw the Fibonacci retracement right here from the low point to the high point in a swing where the price action shows that it has changed and had a swing. So you have a low point here in the price and it turns into a massive swing to the upside. With Fibonacci retracement, you are trying to find a good entry point within a trend. So here you can see this trend is clearly to the upside and you might be getting an uptrend here. So you can draw the Fibonacci retracement tool here from this low point to the high point in a range. Here you can, from this low to this high, you have the swing. Now you can get your entries where the price draws back to these Fibonacci retracement levels. So we're looking for the entry price. And here you can see from this swing that the price draws back down from that, but does not reach any of your Fibonacci retracement levels. So you don't enter the trade. Here you can see there is another impulse from that drawdown to the upside. So you would take the Fibonacci retracement right from this point right here because it is part of the same swing. Here you can get a drawdown from this into your Fibonacci retracement levels. So these are the levels that you can trade and enter positions, presuming that you are in an uptrend and want to open a long position. You can benefit from more swings like this to the upside in an uptrend. From here, you can look for confluence to find if these Fibonacci levels are something you can trade with. So you can use a support and resistance level. For this, click here and then click on rectangle. Here you can see the Fib levels around this level. And you go back and you can see there's a big support and resistance zone where a lot of trade happens. Now draw your zone here. So you have broken through all of this to the upside, and if you have a drawdown, you are in the Fib levels and you are at this area of a trade. So this price level is somewhere where you could make entries. If you consider you are in an uptrend, this is where it would bounce from these other areas where a lot of trades happen. It gives you confidence that this area is potentially at a tradable level, given you assume you have an upward swing in price momentum. So here you have confluence, and the price action is showing that this might be an area where you can trade. I will show you exactly step by step how that works now, but before I do that, make sure to sign up to Bybit, link down below. You can claim up to $30,000 in bonus from Bybit, so sign up. And here you can see that this is where the Fibonacci retracement would have worked. You have an upswing here and a drawdown, a low before a big impulse to the upside. So let's find out if the Fibonacci retracement is going to work or not. Here you have the low and then a huge swing to the upside. Let's assume you missed out on all of this and did not have a retracement. But now you have a retracement, and you can see from the low to the right within these levels. So this is an area where you could have entered positions hoping for another impulse to the upside. Here you have this drawdown that was the low and an impulse to the upside. This impulse stops here and you get a drawdown again in the Fibonacci retracement levels, somewhere where you can enter a position. Here you have an upcycle, and here you have the retracement levels showing that these are areas where you could enter a position moving forward into an uptrend again. Here, from a low to swing high, you can see you have the Fibonacci levels right there. You might have gotten into some trades here, and this is where you would have gotten stopped out of your trades. So you had 3 successful trades, and then you got stopped out. That is day trading. Sometimes you lose, sometimes you win. Here you could have gone into a lower low. So here you have the uptrend, and then you have there the low and the higher high, and then you would expect a lower low and then a bounce. But that did not happen. It gave you a lower low, which was the end of the bull market. Later in the bull market, it came back to this level, but the trend ended here. So you had 3 good trades and 1 bad trade. Now you stop and reconsider your strategy. You can see the fib levels worked on 3 occasions in a row to get this uptrend. So what you're looking for is uptrends with higher highs and higher lows. You are getting these pullbacks, and you are using the fib levels to get those entries. Now I'm going to show you how to enter a position. Don't forget to sign up to Bybit and make full KYC, then you can get up to $30,000 in bonus. Here you have the fib levels, and you're going to go from a swing low to a swing high. Now you can do 2 things first. First, you can either enter a position at the 0.5 level and say when you get a retracement, you will go for it, or you can also choose the 61.8% level here or the 38.2 level, but for this, you should choose the 0.5 level in the middle and assume that when the price gets down here, you enter a position. Next, you can split your entry 3 ways. If the price gets down to the fib levels at 0.382, you enter a third of your trade. If it comes down to 0.5, you enter another third of your trade. And if it comes down all the way down to the famous golden pocket of 0.618, you enter another third of your trade, which splits up the trade. It is because you don't know exactly where things are going. And this is the magic sauce of the Fibonacci retracement strategy here. So we're basically spreading the risk on very strategic areas here. Leave a like down below if you enjoy this strategy so far. It would be beautiful if we can reach 2,000 likes on this video. And don't forget to subscribe and press the notification bell. But let's head forward here. If the price comes down and moves up and you have only gotten a third of your trade, you missed it. If it comes down here and you put most of your trade up here, again, you got a bad entry. Now, once you get your entry point, you can put your stop loss and take profit levels. So you can open a long position here and then assume your entry was here and your price was this. If you had waited for this level, you would have gotten 2/3 of your trade here. You got the 0.382 and the 0.5 levels and did not draw down here to the 618 level. So you only have 2/3 of your trade. Now here, if price pumps a little bit, you can enter the last third of your trade. But to keep it simple, you have an entry right here at the 0.5 level. Now for your stop loss, if your entry is here at 0.5 level, you would want it slightly below this 0.618 level because that is a retracement level. If the price moves below this 0.618, it is not a retracement, but a sell-off. It shows you are getting into the wrong side of the trade. So from here, you can have your stop loss around the 618 level. For your take profit level, if you're looking for quick profits, you can look back and find if there are support and resistance levels where the price is finding resistance. Suppose you want to wait a bit longer and see if the price actually moves up to the previous resistance zone, which is this one, you can take profits there. Or if you think the market is going to move into a big uptrend, you just want to get your entry and wait for some other major price level where it may get to. So these are some ways you can choose your take profit levels. And before I close this up, make sure to go to cryptojobs.com, get a job in crypto. This is the biggest and best crypto job board in the world. And if you have a crypto company, you need to hire through cryptojobs.com. And if you want to come to Dubai, cryptojobs.com can help you set up your company in Dubai from A to Z. It takes care of everything. I am the owner, founder, CEO of cryptojobs.com, so head over there, guys. Anyways, now you have your stop loss level. You know how much leverage you can take in your trades. Here you have your entry and here you have your stop loss, which is around 10%, which means that 10% is your potential downside. And you cannot use more than 10x leverage because that would liquidate your account. So for this, you should use 5 to 6x leverage, which is also within your stop loss level. Which is very easy to do on Bybit. As you can see here with this slider on Bybit, you can just choose 5, 6, you can choose 10, you can choose even up to 100x. And here you can open a position and choose your take profit and stop loss. Your stop loss price should be around here so you can manage the risk of your trade. For your take profit, you can put it around here at this level, and that would be your entry and exit in a long position. So you have your entry, your stop loss, your take profit, and the fib retracement levels. That's all you need. And if you want to know exactly how to open up a trade, just go towards the beginning of this video where I showed you how to open a trade on Bybit. Sign up to Bybit. Let's see if we can reach 2,000 likes. And if you have nothing else to do right now, go trade or go to cryptojobs.com. And don't forget to go right now and click this video popping up right here. It is very important to watch it, and I'll see you over there. Bye-bye.